Happy Wednesday evening, everybody. It's Coach Holmes coming to you. It's Trade Masters time. One of my favorite times of the middle of the week. Allows a couple of traders to go head to head. In this particular case, I got a new foe in Mr. Tom Lau. How are you, Tom Lamb? Sorry. How are you doing, Tom?
I'm good. I'm good. Hi, guys.
Good. So if you're not familiar with the Trade Masters format, it's two willing participants, I guess, is the best way to put it. We're going to bring three picks for you guys. We got three different types of picks. We got a delta pick, which is more directionally based. We got a theta pick, where we're kind of looking for cash flow or time based trade. And then my personal favorite, we got the wild card. That means anything goes. We can light it up and just have a lot of fun with it. So. If you're new to this, hit that like and subscribe. That always helps us out with the channel here. Also, we've got our one of our good friends, Coach Matt, over in the Discord channel. If you're not on the Tackle Trading Discord channel, I suggest you go there. It's a ton of fun. You guys get to talk smack to us without us even knowing. So that's always a good time. So without further ado, we will get started. Tom, I'm going to let you go first because I like going second. So that's the only reason, really. What do you got for a Delta pick for us there, friend?
Coach Craig, it's a pleasure to be here. And for folks that missed our halftime report last night, today, because I'm in Hong Kong, so I just woke up like 6 a.m. this morning. So it's for me, it's last night. So can you give us like just a brief overview of what the market is going, and especially we had the CPI report today, like coming up.
Yeah,
Like an overview.
Yeah, so really nothing crazy as far as I'm concerned. This is the S&P 500 futures that we have here. It's very muted right now. We're trying to get back up to that resistance level at 4,200. The CPI came out. The CPI was right on point. So there wasn't a really big reaction, or at least not anything that I saw over that. Yeah, right now we're kind of in a holding pattern. We got a fair bit of stuff that's up. We got a fair bit of stuff that's down. We've got a real battle going on here. We've got a couple of very important levels. 4,200, obviously, on the S&P 500, mega important. We got this 50 moving average down here around that 40-60 level. Yeah, we had a pop. Google had a pop today. There was a few movers and shakers. The interesting thing I find right now is that we're in the middle of earnings season, or kind of on the tail end of earnings season, and we've run the entire gamut for earnings season. We've had some really good numbers. We've had some kind of trash numbers. The market's just taken all of it in stride. If you look the last couple of weeks, we got a little bit of price volatility, a little bit bigger candles than we had previously, and that's to be expected. Apple had good earnings. Microsoft, we had a lot of the big players have some really good earnings, and I honestly think that helped hold up this neutral type market here. So really, that's kind of where the market's sitting right now, at least how I see it. So yeah, that's where we're at, Tom. So
Thanks. It's a great overview, and I think like as a trader myself, like or investor, like I I I I try to add exposure by not adding exposure, right? Or I try to earn money just to make sure that I won't blow up my account just in case the market turns. Like the market can turn like just the snap of a finger, right?
yeah.
So my first pick, I'm gonna cheat on this a little bit. It is a delta trade, but it has not so much delta as far as I'm concerned. So please bring up a TMF. So TMF is essentially the ETF of the 20-year bond. So what I'm doing here is bond got butchered last year, like because of the crazy rate hikes. So as we are seeing the slowing down of the increase of rates, yeah, you can see like it's almost close to the historical low, and it seems like it has found its bottom at 6.15, and we are stuck at like 8 for quite a while already. So what I'm doing here is I want to participate in the market, but I don't want to add too much pressure to my portfolio. And bond is actually the area that I feel comfortable like owning or playing around with. I mean, as at least on the bullish side. So what I'm doing here is I would throw in a cover call, but is lean neutral a little bit more. So what I'm doing is please do a cover stock. Yeah, a cover stock is essentially a cover call, but it's the lingo of the thinkorswim. So cover stock on at June 16th. Yeah, June 16th, 30 days, 37 days out, and I would do it X strikes, X strikes. Yeah, it's literally an in the money cover call. So if we could get it in the mid price, which is 747. Yes, yeah, you're right. Yeah. 747. Yeah, 747, 750, doesn't matter. So what I'm essentially doing here is I'm buying the stocks.
I think I've got this backwards though. Hold on a second. That's better because you're buying the stock and selling the call, right? Okay, that's right. Sorry, I had it backwards there.
No problem. Yeah, so 750, 753, doesn't matter. So what I'm doing here, I'm buying 100 shares of stocks of TMF, which something that I think is a good sentiment that I would like to play with, and I'm simultaneously selling a call against it, and the call right now is about like 60 cents, 60 some cents. Yeah, the call right now is 60 cents. 65, sorry.
Yeah, about 65.70. Yep.
Yeah. So in the money cover call essentially is I do aggressive delta hedging, which is what I'm doing here. So if the stocks go up or doesn't move by the end of June 16th, my shares will get caught out, and I would capture the whole 65 cents, and that's it. Actually, and actually the extrinsic value, the time value, which would be the 65 minus the 825 minus the 8, which the intrinsic value of this call would be 25 cents. So what I'm doing here is oh, thank you. Yeah, so actually I captured the whole $46. That's it. Yeah. And if it turns south, so if it drops, I still have some protection on the stocks until 750 or 753 in this case.
Right.
So yeah, I do some direction, but not doing some direction, and doing yeah, I cheat a little bit here, but yeah, this makes me feel good. Like in the Vikings, like Mark always said that you have to pass the sleep test. So this trade definitely passed the sleep test. I can sleep well with this trade, and literally for me, I literally sleep on the trading days. You know, like I sleep during like 11 a.m. like U.S. Eastern time. So I have to pass the sleep test. That's my trade.
Okay, sounds good. So TMF, yeah. So a couple of things that I think about this trade here. I agree with your analysis. It obviously got beat up. It seems to have put in at least a temporary bottom. If they stop bumping up the rates, which is kind of the theme right now, this should find some support at least. It's been trimming sideways, much like the markets, right? The markets in general have been, very muted and neutral right now. So 100% not an issue there. I guess my only concern, my only question for you, would you put a stop loss or something if the market started, if TMF started to fall here? Would you have a tap out point, a spot where you would want to say, okay, I've had enough kind of thing, and get rid of the trade, or would you just kind of play it out and see what happens?
Well, I am not a stop loss guy, so
Okay.
yeah, I use position size as my stop loss. So $700, 750. Um, well, uh, for me, I would not put a stop loss, but like if for some folks, 750 would, if 750 would be a little bit stretch for them, I would suggest, yeah, put a stop. But you know what? Like if you put a stop loss at 750, like which is the recent low, it hit 730 in March, and then it hit
Yeah.
it hit 755 at like in the beginning of the year. It's really tough if you put a 750 stop loss and it just hit it right, and then it just bounced back without you. I mean, it's tough. It's
Yeah.
tough to play with stop loss in this environment, from in my opinion. So I what I would do is it really happens to drop to down to 750, I'll just keep adding cover call on this thing.
Just continue to sell cover calls. Okay. Well, see,
Continue to sell
that's,
cover.
that's kind of what I was looking for, is what's your exit plan, right? We at tackle trading, we always talk about, it doesn't matter what kind of trade you're going to do. What are you going to do if it goes against you? What are you going to do if it goes in your direction? You know, you got to have an exit plan, whatever that exit plan is, right? My kind of thought process here, looking at this low at 16 or 615 here, you know, even if you put a stop loss, and I know you're not a stop loss guy, and position sizing is actually a stop loss, which is good. But even if you said, okay, I'm going to get out at 615. Okay. So at 615, if it got back down to that low again, you just call it quits. Well, at that point, you're risking a buck 41 to make 47. So that's not the worst thing in the world, right? Like, obviously you don't want to lose 3-1, but it would be better off to lose 3-1 as opposed to, you know, 10-1 or whatever. So whatever your
Yep.
exit plan, in your case, it's position sizing. For the folks in our community, you know, a stop loss is not a bad place to be. I think 750, like you said, is very close. I don't think that's good. But looking at this low, you know, if you kind of look a little bit bigger out, and this is a weekly chart here, right? Like, this thing's had its beat down, right? This would be a spot where I could see a double bottom forming and taking off again. So you'd want to give it every opportunity. You've given it a lot of room here that it would have to move quite aggressively to get to your stop loss there. And then you could take your system as well. You could continue to sell cover calls to recoup some of that that damage as well. But, you know, make sure that you don't get absolutely crippled. You know, nobody, I think, wants to lose $750. You know, that's probably outside of most people's pain threshold. So if it is, like I said, having kind of a stop loss and then taking your idea of selling more cover calls, not a bad idea at all as far as I'm concerned. So yeah, interesting trade. Yeah, it's, you know what, the one thing that I can say very good about it, Tom, is it's perfectly in line with the markets. That is about as neutral as trades get, and the market is about as neutral as it gets right now. So you're right on they say to follow the trend, and I would say right now you, sir, are following the trend. So very neutral, but no, that's good. Good job there.
Yeah. Thanks, man.
I'm going a little bit different direction here. I actually have to decide here. I've got a bull call and a bear put. I like them both, and I'm kind of torn as to which one I want to do. Let's go AMBA, because I'm not sure what the market's going to do going forward. I don't know if it's going to pop out the top side or drop the bottom side here. So what I look for instead is I look for technical trades at this point in time. If I don't have a strong theme, and I know Coach Mark, that's one of his biggest thing is he's a thematic trader. He needs a theme. Sometimes all I need is a pattern. And for me, this is a pretty wild pattern here that I see for AMBA here. Okay. So AMBA's gotten beat up. It rallied outside of this falling wedge, but it got right up to this 20 moving average here. And now we're getting a couple of red candles here. Okay. It sure seems to me that, well, it's tried once, twice, it's tried 3 times now, 3 times right on the money of that 20 and could not break it. This sure looks like a bear retracement to me. I could see this. Really, there's only 2 things that can happen here. Either Ambarella pops up and tests this 50, or it rolls over and breaks back down through the 9. Right now, we're kind of stuck in limbo. But what I like about this is, and again, this will be every trade that you're going to do, you have to have a trigger. And for me, the trigger is obviously below that 9-period moving average. If it can't get below there, then I have no interest in this trade. So for me, the actual entry for this is about 64.75 is my trigger for this trade. But the trade that I liked the best was going out to June 16th. Okay, so our monthly expiration, and doing an easy bear put here. So buying the 65, selling the 60, okay, for $1.80 here. And if you look at this here, we're right around this. We're going to get in just below that 65 level, and the next level of support, smack dab right on that 60 average there. So I'm not asking for the moon here. All I'm asking for this to, if it does get below that 9 again, is to push back down and make a double bottom here. At which time, if it did make that double bottom, I would actually want to close out this trade and take whatever capital I could get out of it. The reason I like this trade is we got an ATR of 2.4, and we're only asking this to move $5. So that's 2 ATRs in a matter of 37 days. That's lots of time for this to get to where it's got to go. And I think it's a really good trade setup. And the one thing that I really like most about it is the market's going to tell us what to do. Okay. The market's either going to break up and close above this 20 and keep on moving towards that 50, or it's going to break below that 9 and most likely push back down there. Whichever way it goes is great, because if it gets below there, I get into a trade. If it goes up, I leave it alone and move on to the next one. So it gives us a couple of opportunities. But $1.80 here, if we kind of look at this trade and analyze it, okay, you're risking $1.80. Well, sorry, I got a couple extra trades on there. Just bear with me 1 second here. Yeah, I got a couple of them in there. Don't want too many in there. So risk $1.80 to make 320. In my books, that's a heck of a place to be. You know, you're not quite 2-to-1 there, but you're darn close. Actually, yeah, you're not quite 2-to-1, but you're awfully close on the risk reward there. So for me, this is an easy delta trade, easy trigger. It's low money as well. So, you know, you could use a stop loss on this if you wanted. For me, $180 debit is within my pain threshold. So for me, I would position size to risk as well and just let this ride. You could put a stop loss, you know, you could give yourself a fair bit of leeway here and get out of it so that you don't lose all of it, which actually would increase your reward here. So if I were looking at a level of resistance here, that 50 is around 72 and change there. So if we look at this, let's see, 72 and change. So yeah, if we got up to 72.50, you're risking $100 there instead of 180. So now your risk reward is well over that 2-to-1, which is what we like here. So for me, delta pick, easy bear put here. Again, only triggers if it gets below 64.75. That's kind of my that's my entry criteria, if you will. Any thoughts on that trade there, Tom?
Well, why would you choose to start? I know it is a semiconductor stock, like because of the theme, or because of something else that you see weakness in this stock.
Yeah, so this had nothing to do with the sector. This for me was just a technical play here. I see that it's pinched between the 20 and the 9. Okay, so I know that pinch has to resolve one way or the other. It's either going to resolve to the upside. If it revolves to the upside, then I'm not in the trade anyway. If it resolves itself to the downside, then I've got myself an easy technical trade here. So I don't have a theme to go with this one like Mark does, like Coach Mark. This for me is just strictly a technical directional trade with low risk, right? I don't mind risking $100 or $180, and it gives me an opportunity to not quite double my money, but that opportunity is there to be pretty close to doubling my money. So for me, this is strictly technical.
Yeah. So, well, I mean, the only thing that I can see here is, uh, I don't know if it's because of the CPI report today, because it pops up from 65 to 66.7. Like it breaks the 20 EMA SMA a little bit today. I don't know if that messes up your trade a little bit, but yeah, as long as you won't place it unless it breaks 65, I think, yeah, or 64 something, yeah, you should be fine, I think. And it looks bad. I mean, this chart looks
Yeah,
bad.
it's not pretty. There's not a lot that I see that I like bullish. Now you could make the case that you've got a falling wedge pattern here,
Sizable downturn.
which
Yeah.
I do like, falling wedge patterns. But like I said, so today it did pop above that 20, but then it closed right at that 20 as well. So it didn't have enough
Yep.
follow through to make it to make it. And again, this is on a day where there was a fair number of stocks that were actually in the green today. So it just didn't seem to be
Yep.
following it along. So yeah, typically just a technical trade for me. So all right, Mr. Tanyan,
Great.
can you throw up a poll for us? TMF versus AMBA. We got a covered stock, and we've got a bear put on AMBA. All right, Tom, what do you got for theta trade, my friend?
Well, Theta is my favorite,
There you go.
And yeah, and I well, let's see, please. FCX,
FCX.
one of our favorite stocks, one of the favorite stocks of our community. Tackle 25 stocks.
Yep.
Fundamentals, gold mining, copper minings. Well, I mean, it's with the banks like crashing like crazy, and banks closing. So I think it matches the theme at least, right? And given that it's a good fundamental company, and what happens is I like this pattern. I mean, I like to pick up good quality companies when it is on sales. So can you put in the 200 daily? The 200 daily?
Let me add it in there.
Yeah. Can you put in the SMA? Sorry.
Oh, you want the simple? Okay.
Yeah, I want a simple. Yes.
1 second. 1 second.
No problem.
Get rid of that guy. I'll throw this in there. 200. We'll make it. I actually can't remember what I added at. We'll make it yellow. That way everybody can see it.
Okay.
All
Okay.
right,
Great.
apply there. Click that. All right. There's our 200 right there.
Yes.
Nice yellow color.
You can see. Well, it technically it drops to 30 35 something, and then you got support. It bounced back to 43, and then it drops to like close to 36 right now, and it hits it found footings on 200 daily. What I love about these stocks is it had treated me very well throughout the years as a cash flow trade. On top of that, I feel good about owning it if I have to, and if I needed to. So can you also bring up the weeklies?
Yeah.
Well,
Just give me 1 second.
Yeah, the 50 weeklies. Yeah, I think you have weeklies there. So the 50 weeklies.
Actually, I can just do this. 3-year weekly
Yeah,
will do.
I think you can. Yeah, no problem. No problem.
There we go.
Yes, you can see that 36.24 is right at the 50 weeklies. And actually it hit the 50 weekly today, but it
Mhm.
bounces back up. So it found footing as well. So is I feel good about the stocks. Then it is at the 50 weeklies and the 200 dailies. So I don't know if I place this trade today and then it will drops furthermore tomorrow. I don't really care. So because it gives me good enough feelings and good enough return on investment on playing this trade. So if you go, please go to the trade tab and then on the option trading, um, June 16th, you will get 32 strikes and 17 delta. You can get almost $50. Yeah, 49, $50. Yeah,
Yeah,
for a naked put.
we could
Yeah.
fudge that to
So
50. Yep.
yeah, so with margin, oh sorry, yeah, your Canadian margin is a little bit different than the US, but
Yeah,
you
Canadian
got
margin's going to be crazy.
but still, I mean, you still get like 8% return. Is that Canadian margin?
Yeah, so
659. Yeah, you get like 7.5. With the US margin, you get 15% return.
yeah.
Um, for a cash, guys, I mean, for an IRA or for anyone who don't want to play with margin, you get 1.5% return on a very quite conservative stocks and and a good fundamental stock. You know,
Yep.
yeah. And what I would do is drops a little bit more you I would scale in a little bit more. Of course, it is not a short-term trade. It's more like adding on to your long-term portfolio or your investment portfolio with these quality stocks. So I would actually I did place this trade above $50 last night today. Yeah,
Yeah.
whatever. Yeah. So yeah, and it treats me well with the um moving averages. So I would instead of bailing out, I would scale in more, at least 2 to 3 times. I think originally I planned to do 3 contracts. So if it comes down a little bit more, I sell one more. If it comes down a little bit more, I sell one more. Yeah.
So
Uh,
you'd be willing to
so
own 300 shares then.
yes, yes, yes.
Okay.
In this market, in with the theme backing me up and all that thing.
Yeah.
Yeah, and then I'll start selling cover calls on it. Yeah, it would be a boomerang trade for me, actually.
Very good. Yeah, I've always liked FCX. I know in my lab on Mondays we've done a deep dive into FCX. It made our fundamental hit list. It's a tackle 25 stock. It's absolutely fantastic. I do like the support of the moving averages here, the 200 and the 50 on the weekly. I like the fact that you've taken the tact where you say, okay, if it drops below, I'll just add a little bit to it. You know, make sure that you don't exceed your you know, the position that you're looking for in your portfolio. I like FCX. It's a dividend pair, which is always right up my alley as well. I guess my only thing with FCX, and I've always had this question with it. You know, we look at the gold chart itself, and I know it's not just gold. I know it's gold and copper, but gold's been on an absolute tear here, and it's rolled over a little bit. And then if we look at the copper's been it actually looks more like a copper chart than it does a gold
Yep.
chart, even though that they do have exposure to both, which is great, right? But it does kind of mimic the copper chart more. So if copper could get its act together, you might get a heck of a run out of this as well. So it would be nice to own that. You look at copper futures here. This looks a lot like FCX. So you get a breakout to the top side of copper here above that 4. level there, and you could do pretty well. So yeah, great trade, Tom. I'm on board with it. I like it. I like it a lot. All right,
Thanks.
I'm going to go a little bit more aggressive, much like I did in the last one there. Um, uh, LVS here, Las Vegas Sands. So this thing has just been an absolute juggernaut, basically since last October. Like this for this stock, if you look at this is a tale of two parts of a brain, I guess, right? We have the left brain here that was basically neutral for 6 to 7 months. And then we got the right brain, which has just been going gangbusters, right? Broke out to new high over here, held up on support really well right where it is now. All the moving averages pointing in the way that we like them. Just showing a lot of strength here, just a ton of strength here. When I look for stocks that I want to cash flow, especially all the cash flow trades or most of the cash flow trades that I'm doing are bullish trades. Your naked puts, your bull put spreads, those kind of things there. I want the bullish move out of this. So for me, Las Vegas Sands, I think that there's still more gas in the tank here. We're not into overbought territory like we were a couple of weeks ago. It's quickly working that condition off. So that gives us an opportunity. So then my thought process was, how far away can I get from here and still collect some decent money? And so a bullish theme, bullish trend, everything I like about this trade. And now I can go in. By the way, we just past earnings, so I don't have to deal with any of that stuff. I went out to let me look here, the June 9th, okay? 30 days out. I didn't go to the 16th because the strikes weren't what I wanted. So I went out closest to 30 days, which is what I normally do. And I went all the way down to the 56 here and getting about $47 here for a 56 naked put here. Now, if we look at 56 on the chart here, 56 is all the way down right about there. So I've got the support of the 50. I've got the support of the 20. I've got some more support here kind of at the 58 as well. I got a ton of support here, and yet I'm on a delta here. My delta is a 13 delta, and I'm still getting almost $50 on it. I just think that I'm giving myself a lot of cushion here. I could have went even further down to that 55. I didn't think that was necessary, and I wanted to get the full boat here of getting closer to that $50 there. If you wanted to be a little bit more conservative, you could still go get $37 on an 11 delta. So Las Vegas Sands got some money in it. It's a bullish trend, even with all the other stuff that we've got going on in the markets, all the economic data we've had in the last couple of weeks, the Fed announced all this stuff. This just hasn't really cared. It just keeps on trucking. So I like strength. This is what I see in here. And I want to play it where, hey, if you want to pay me some free money, well, this thing, whether it trims sideways, whether it takes off, or whether it comes down and tests this 50, I'm still getting that theta every day. And so my trade here for the theta round is Las Vegas Sands naked put 56 for $47. Any thoughts on that, Tom?
Well, you have the 9, you have the 20, you have the 50 as your support. It's great, and well, I mean, can complain with that. I mean, too much. Just that the credit is a little bit less than what I wanted, but I think to be on the conservative side, where the market can turn south anytime. I think it's not a bad idea. I mean, playing with this trade. I'm just curious. I mean, what happened to Las Vegas Sands? I mean, they're doing good, but the theme itself, but the theme itself is not quite compelling.
It's really not.
As far as I'm concerned.
It's been the cream of the crop for the casinos here. The rest of them have been virtually nothing, but it's leading the pack. And I know when I start to look for trades, I'm looking for the best. I'm looking for the strongest in a bull market, and I'm looking for the weakest in a bear market. and Las Vegas Sands, whatever they're doing it right. So
Yeah,
well,
maybe they benefit from the reopening of the China. I don't know. Like they have quite some business in Asia.
yeah, they I think they do have some stuff there as well. So yeah, anyway,
Yeah.
that's straight. Mr. Tan Man, can you put up Las Vegas Sands versus FCX? Both great cash flow trades. Loving both of them. It's this will be, I think, a tough one for our folks to choose there. I know it'd be tough for me to choose between these. I like both setups. So all right, sir. What do you got for a wild card, my friend?
Well, they like your amber trade, you know.
Oh yeah.
Yeah, I just find it. Yeah, they love the more aggressive bears trade.
Yeah. Well, I can't see the
Well,
poll. I can't see the
I
poll results, so you'll have to feed them to me. So
but I can't blame them. You know, like I wanted to play some bears trades as well. I couldn't convince myself too much. But I actually I love your amber trade. Yeah, I look into that too.
nice.
Well, my wild card would be quite wild. It might seem uncharacteristics as a conservative trader, but I I I will do this sometimes. Please bring up UPRO, UPRO. Yeah, is the leverage ETF of the S&P.
Hmm.
So you can't get wrong, you can't go wrong playing with the market itself. I mean, especially its lack of direction. You don't know what to do, or sometimes try to cheat on, on the research time that you spend on individual stocks, right?
Hmm.
So what I'm doing here is we are basically in a range right now, and what I'm doing is I bet the market will not above 42 in UPRO, which is almost like 2200, 23, 40, 4200, 4300 in S&P. So what I'm doing here, I would do a leg in cover call. What I'm doing here, I will first sell call 42, trade tap June 16th, uh, 42 strikes. So I'll get 70 cents. Okay, 70 cents. And then I would do is I will put in a buying order. 40, sorry, let me put my chart. Yeah, I will put in a buying order. Price 41.
So put
You
a buy
can,
order in
yeah,
for
yeah,
41.
yes, yeah. And then I just
Now would
let it go.
that'd be a
Yeah, first,
stop. That'd be a stop order then. Something like this.
uh, yeah, stop order. Yes, yes, yes.
Okay. Just putting the trade
Yeah,
together here. So.
yeah, thanks. Yeah, for stuff that for folks that don't know, I think you guys know what the stop order is. Yeah.
Yeah.
So, yeah, what I'm literally doing here is I bet the market would not go over 42, but if it does out of the 38, 39 like model, I'm willing to own the stock at 41. Is essentially the market. So I feel good holding it for a period of time. So I'll keep doing the cover call,
Okay.
which I would essentially do. And and then I will when the 42 expires and when the call expires, either let them I would do a more cover call if I own the stocks, if I own the stocks at 41.
Okay.
You see where I'm going here? Yeah, so what I'm doing is I try to put a positive beta bearish delta to my portfolio a little bit. Yeah,
Yeah.
and if it breaks to the strong side, I'll buy the stocks to cover it, and that is my my plan on this wild card.
Okay. Just want to check something here. Okay. So this is one of the leveraged ones, right? Okay. So what I was
Yep.
looking for here, just FYI for everybody watching, I was looking for a bleed here. So some of the leveraged ETFs, they have what's called a bleed. So it's where they recalculate their numbers every so often, and you can get a bit of a bleed. This one doesn't seem to have that problem, so not an issue. What you'll see is if you see a chart that just goes
The VIX,
down, and
the
yeah,
VXX.
yeah, the VXX, if it just continually goes down, or UVXY, I think does the same thing. UVXY, yeah, if it goes like this, that means there's a bleed on it, and it means it's constantly being um, I forget the terminology for it, but they do a recalculation, and there's a bleed off of it, so it continually goes down over time, and so you have to be careful with that. This one doesn't seem to do that, so that doesn't become an issue. Owning the stock, if you own the stock and there was a bleed to it, that's the question I had was, okay, if you're going to own it, you probably don't want to own it long term if there's going to be a bleed to it. In this case, that's not a problem, so you're
Yeah,
good there.
but yeah, but that it's a short and term trade anyway. So yeah, I don't plan on like holding UPRO for extended period of time. But yeah, it's rather a trade.
Right.
Yeah, but yeah, but the nature of this ETF gives you flexibility to play around in a considerably moderate period of time.
Yeah. And that's a good credit too, right? Like 70 cents, $70 on a
Yep.
contract is nothing to sneeze at. So yeah, interesting trade, man.
Yeah.
That's awesome. Yeah, legging into it, I think is a really good idea. If you're wrong, you say, okay, my tap out point is I'll buy the stock at 41 before things get ugly. It's a naked call without being fully naked, because you've got that order in already to buy the stock should it start to go against you. And that's something that I want all the folks out there watching to think about, is you never want to leave yourself in an open naked trade. You're asking for trouble. We kind of teach here at Tackle Trading, don't ever leave yourself naked. Always have either an exit plan of some type, or what you've done here where you've actually already got the order in to protect yourself. I can't remember the last time I did a naked call. I'm typically doing bear calls instead, or legging in like you described here. So yeah, I like the setup. Very cool. Yeah.
And I want to add on to that is if it comes down to 37 or 36, I would actually so I would capture the 42 call at least like maybe 50% profit already.
Mhm.
So what I would do is I would put in a naked put to make it a short strangle.
Okay.
That's what I would do. Yeah,
Yep.
put in
Collects.
30 put in 30, yeah, 31 put right now is at 40, is at 50 $55. So if it drops that level, I think you can get like 60 $65 credit
Right.
for the same for the same expiration 31 negative put 31 30 doesn't matter, just an idea to
Yeah.
try to play some strangle on this market.
And for those who aren't familiar with the strangle concept, what Tom's doing here is he's playing the range, right? He's playing the top side in a very calculated way, and then if it does pull down to the bottom side, he wants to play the bottom side, expecting the range will hold. And if the range holds, he's going to sell more credit down at the bottom here, and allow that time to tick by and collect the cash. So yeah, I like the thought process, Tom. Well done, sir.
Thanks.
All right, for my wild card, everybody knows I'm kind of crazy when it comes to wild cards. I'm gonna it's gonna be no different today. Those who know me, know that Netflix is usually not on my radar for a trade. But this one I could not pass up, and you'll see why in a minute. Um, well, here's what I like about Netflix. Okay. If we kind of look out at a weekly, this thing got absolutely destroyed, like demolished, right? 700 down to $1.50 before it started to take off. This is a weekly chart. It's making higher lows, has been for a while in the weekly chart there. It's holding the 20 weekly moving average there as well. You look on the daily chart here, it had a run, pulled back, got past earnings, no problem there. It's got a nice little level of support right about there, working its way higher. It's range bound as well, right around that 50. So for me, I thought, you know what, how could I play this in such a way that if it remains range bound and ends up at that 350 level, which, okay, it's a big round number. It's been tested multiple times already. It could stay in this range for, it's already been in this range for a couple of months now, could stay in the range for potentially another month there. How could I best benefit from this if it continues on this way? I don't know that it could go to the moon, it could go to the floor, I don't know. But if it continues to do what it's going to do, I wanted to take advantage of that. So the wild card trade that I came up with, as wild as it is, maybe it's not wild to everybody, but it's wild enough for me. I'm basically taking a home run shot here at Netflix. Okay. So here's what I decided to do. I believe that 350 is an important level. Okay. As evidenced by the chart, 350 has already been tested. It's a nice round number. It's been tested multiple times here. So that makes sense to me. It's not that far away from there. It could get there quicker. Maybe it takes some time. Doesn't matter as far as I'm concerned. What I'm looking at here is doing a butterfly. Okay. Sorry, I got to get rid of a bunch of this stuff here. 1 second. All right, there we go. Get rid of that for me. Try this again. So what I want to do is I want to sell a couple of these Netflix 350 calls. Okay. Now I'm going to go and I'm going to buy the wings for this butterfly. So I'm going to buy the 345 and I'm going to buy the 355. All right. I now have a trade that's going to cost me potentially 30 bucks. I might not get filled right for 30 bucks. I might need to give it a little bit more. I'd actually give them 40 bucks and I'd still be okay with this. Okay. Here's the wild card part of the trade. If I'm right, and this thing just continues sideways, let me get a better chart here. If I'm right and this thing just continues sideways and then ends up pushing up at this resistance come the middle of June, okay, that's where this trade looks pretty awesome. All right. So I'm spending, in this case, I got 30 bucks here. Let's say it's 40 bucks. I have a potential to make 468 bucks, 469 bucks if it dings. Is it going to hit 350 exactly on June 16th? Probably not. But I've also got a real wide berth to make some money here. So if it's anywhere between 355 and 345, I still get to benefit from this trade. Okay. And if I hit the top, it's a massive home run. For me, like I said, I don't play Netflix that often. It's not really on the top of any of the lists that I use. But in this particular case, I was able to put together a pretty sweet trade for 30 or 40 bucks and give myself every opportunity to crush it on a home run trade. If I could put out 40 bucks and make 468, that's a 10 to 1. If I put out 30 bucks, that's almost 15 to 1 reward to risk, right? So that's what this wild card trade was all about. I'm betting 30, 40 bucks on the fact that this kind of trims sideways and stays somewhere in that 350 neighborhood. Even if it gets out above, gets to that 355, I still have an opportunity to make something out of it. And if it decides to pull back to the 345 area, there's still an opportunity there. So I've got a pretty wide berth for Netflix. And like I said, if I get lucky on June 16th and this thing's at 350, it's just an absolute home run. And for me, $30 is well below my personal pain threshold. Let's put it this way. I've spent $30 in a lot dumber ways than this. So that's my wild card trade there. A little butterfly, just a straight up butterfly on Netflix. I do like the chart. I do like that Netflix has been showing some strength, especially that weekly chart actually looks really, really good. So I could see it getting, getting back to that range there. Yeah, it just looks pretty good right now. So I don't think you can argue with it. It's past earnings, so I'm happy about that. Not something we got to deal with. And you know what? I'm going to take a shot, 30-40 bucks here, and see if I can't hit a home run. Any thoughts on that one, Tom?
Well, Netflix. Oh, by the way, they love us both on the second round. So we will see what happened to the third round. They want the folks want to make it interesting, you know.
Yeah, for
So
sure.
what happened is I think Netflix I think you can never go wrong with a butterfly, you know, like 30 bucks, like as you said, you would spend it like everywhere.
That's like two Starbucks.
So
It's like
yes, and yeah, and actually you can what you can do is like sometimes what I would do is I don't want to pay the 30 bucks, so I would finance it with a naked put,
okay, yeah.
something else. Yeah, to try to make it a free trade, like make it feel like a free trade sometimes. Yeah, but I do like the fact that Netflix is coming up strong. Like I think it's since that yeah, like
There you
245.
go.
You
Sell a
mean?
245 put and be way down here.
I
Way
mean, and
down
then you have,
here. Oh,
yeah,
that's an ugly
it
chart.
takes a lot. Yeah, it would take a lot to for it to come down to like uh
All the way
to
down
four
here.
245. You know, yeah,
Yeah.
it's really what delta was that? It's like delta
Uh,
5,
didn't even see what the
1,
delta was. Two. that's,
240.
that's a two delta. So
Yeah, yes, the two delta. So yeah,
mm,
it's very likely that it would not happen. So
yeah.
I think, yeah, yeah, I think butterfly is a good one. And then I remember like Gino last time, like he said that like sometimes your portfolio or your return for that year, sometimes it just takes a trade or two
Mhm.
to flip that account around. So I think it's a good way to play around with this, to sometimes like throw a wrench to them, to your account, to try to see if it hits, you know. If it
Yeah,
doesn't hit, it don't matter, you know.
it does a lot of things, I think, at least for me anyway. It allows me to speculate for very little money. I know that
Yep.
it's not a high probability trade, right? But I know that, I've got a wide range where it can end up in. And if it does hit, well, that's another 15 more trades that I can speculate with, right? So
Yep.
I do like it. And again, speculation has to be a small part of your portfolio. But if you're going to speculate, and I know Coach Gino that you mentioned there, he's infamous for having these really cheap butterflies where he's able to
Yep.
speculate. And so for me, and the other thing that I like to talk about here when it comes to this is a $335 stock. Okay, most folks aren't probably buying stock in Netflix, right? You're going to use the options market in some way, shape, or form to trade it. And this is one way where you can get a really, really cheap set of options, to play and to speculate on what happens with Netflix. So that's why I like the butterfly trade on this one.
Yep.
All right, Tan
And
Man. Sorry, go ahead, Tom.
yeah, the results came in. The folks love your Netflix.
Oh yeah, so they took the Netflix, did they?
Yep.
Perfect.
Yeah, they took the Netflix. Yeah. Well, happy to see you guys, and I think my U Pro is a little bit too wild, maybe.
Oh, I think it's a great
Uh,
trade. It's I think the thing about that particular trade is you have to understand that, okay, I need to set this whole I have to have this concept in my head to begin with, right? Like the fact that you said,
yeah,
okay, if it does this, I've already got my order in there, or if it goes down, I'm going to turn it into a strangle. See, and that's the thing. Like for the folks who are just watching this and maybe you're not part of our community, head on over to tactletrading.com. You get a 15-day free trial, and you can see where coaches like myself and students like Tom here, this is what we teach on a regular basis. We teach you to be able to sit there and go through the process and say, okay, if A happens, I'm going to do B. If B happens, I'm going to do C. And so you already have this thing all mapped out in your mind, and it makes for easier trading. It takes a bit of the psychology out of the terror, if you will, out of the trades. Putting on $30 Netflix trades here, it makes it so that it's not as hard. Everybody thinks that, the options market can be treachery, and it can if you don't know what you're doing. That's where our education comes in. So anyway, I'd like to thank you, Tom, for coming out. It's good to see you again, and sorry we woke you up so early, but happy to have you here on Trade Masters. Little shout
No,
out
it's
again
fine.
to Coach Matt and all the folks over in the Discord channel. Like I said, check out the Discord channel, Tackle Trading. Head over to tackletrading.com. Please hit the like and share button there. We'd love to grow our community. We'd love to have you guys involved with this. And I'll be back next week to face another challenger, another worthy opponent. And thanks. And I'll give the last word to you. Anything you want to say to the folks there, Tom?
Well, I think really thank you for Coach Holmes for this opportunity. I love Trade Masters. Yeah. It's good to get some great picks in midweek. I think especially after like a few days of nothingness in the market,
Yeah,
yeah. Yeah, and I think education really helps. I as a student myself, I think like I learned most of my training. I mean, I learned most of the tradings and investments from tackle trading. I think, yeah, if you are serious about learning uh, uh, to control more about your financial future, you definitely have to hop on to this community.
absolutely. Absolutely. Thanks for that ringing endorsement there, Tom. Again, we appreciate you. We appreciate all our community members and hopefully our new ones as well. So thank you, Tanyan. And we'll see you all guys in 7 days or less. Thanks so much, and take care. Have a great night.
Thank you.